everyone, and welcome back. If you're a Tesla investor, I bet your head is spinning right now. If your portfolio's up, congratulations, you're killing it. If it's down, hey, we've all been there. But either way, you've probably just seen something that makes absolutely no sense.
That's right. We're talking about a situation where record-breaking good news was met with a pretty significant stock drop. It's a real paradox.
Okay, so let's get right into it. This is the big question. Tesla just had its best quarter ever, delivering a record number of cars and blowing past all the expectations. So my first thought is, great, the stock's going to shoot to the moon. But it went down over 5%. What is going on?
It's the classic Wall Street puzzle. On the surface, the numbers look fantastic, but the market's reaction tells us that some big investors are seeing something else under the hood. So let's break down the two sides of this story, starting with all the good news, the bull case.
Perfect. Let's start with the positives. For anyone feeling bullish on Tesla, walk us through it. What are all the things that have them so excited right now? It seems like the company is just firing on all cylinders. Well, it all starts with this number, nearly 500,000. 497,099 to be exact. That's how many cars Tesla delivered in just the third quarter. This wasn't just a personal best for them. It completely smashed what Wall Street analysts were predicting. By any measure, this was a huge, huge win. Wow, okay, so how did they pull that off? Was it just one thing?
Not at all. It was really a perfect storm of positive factors. A big one was the expiring $7,500 EV tax credit here in the US, which definitely pushed a lot of people who were on the fence to buy now. But you also had Elon Musk personally buying another $1 billion of stock, which is a huge vote of confidence. Plus, sales in Europe bounced back strong, demand in China is still firing, and their energy division, the Megapacks, is really starting to boom.
So it sounds like the car business is doing great. But I keep hearing people say that if you're only looking at car sales, you're missing the bigger picture. Is that right?
That's exactly right, and it's the core of the bull argument. For the biggest Tesla supporters, the cars are just the beginning. As the analyst Dan Ives says, you have to think of Tesla as an AI innovator first and foremost, not just a car company.
And this is really the heart of it. The bulls see the cars as just the hardware, kind of like iPhones, for what's going to be an incredibly profitable software and AI business. They're betting on things like full self-driving and a future network of robotaxis. Some are even predicting that this tech could be in 30 to 35 cities within a year. And if that happens, it could add $1 trillion to the company's value. That's the massive future they're investing in. $1 trillion? Okay, that's a huge number. But that brings us right back to our paradox. If the future looks that bright, why on earth did the stock fall after such a great report? So let's flip the coin. What are the bears, the skeptics, seeing when they read between the lines? The number one concern for skeptics is a concept called pull-forward demand. Here's a simple way to think about it. Imagine your favorite store announces it's closing for good in 1 week and everything is 50% off. They'd have a massive surge in sales, right? But it's not because they suddenly got more popular. They just convinced all their future customers to buy everything right now. The market is worried that Tesla just did the exact same thing without expiring tax credit. And this slide shows the exact data point that has the bears so worried. Look at the numbers. Yes, deliveries were up, a new record, but look at production. They actually made fewer cars than they did in the same quarter last year.
Whoa, so they sold more cars than they made.
Exactly. They were clearing out their existing inventory. For a skeptic, that's a major red flag. It begs the question, what happens in the next quarter when that tax credit incentive is gone? Will demand fall off a cliff? Okay, so worries about future demand, that makes sense. What other risks are keeping investors up at night?
Well, that's just one piece of the puzzle. The bears also point to a sky-high valuation. A price-to-earnings ratio over 250 is just massive. For context, a company like GM is under 10. It means an incredible amount of future success is already baked into the stock price. On top of that, you have fierce competition from rivals like BYD who are catching up fast, and growing regulatory pressure over the safety of full self-driving. It's a whole collection of pretty serious risks.
So we have two completely opposite stories being told with the exact same set of facts. One side sees this incredible AI company on the verge of world domination. The other sees a temporary sales spike that's hiding some really big problems. I can only imagine the pros on Wall Street are just as confused as I am. They are completely divided, and this chart really shows it. These are the price targets from professional analysts, basically where they think the stock is headed. The bears see it falling down to around $250. But the bulls, they see it soaring past $600. You know, this isn't just a small disagreement. It's a fundamental debate about what kind of company Tesla actually is. This is exactly why it's so confusing for a beginner investor like me. So how can we make sense of all this? Can you boil it down into a simple framework that someone can use to think through this and make their own decision? Absolutely. In the end, this entire debate really comes down to which of these two descriptions you believe is more accurate. On one hand, you have the bull view. Tesla is an AI and robotics company that just happens to make cars right now. Its real value is in the future. On the other hand, you have the bear view. Tesla is an innovative but fundamentally overvalued car company that's about to face the same old problems every other car company faces: slowing demand and tough competition. Okay, that makes it much clearer. So if we want to figure out which story is winning, what are the concrete signals we should be watching for in the next few months?
There are 4 key things. First, the Q4 delivery numbers. We'll find out if that sales spike was a one-time thing. Second, real, tangible progress on full self-driving. Is the tech actually getting better in the real world? Third, competitor sales. Are companies like BYD and GM starting to steal market share? And finally, profit margins. With price cuts and new spending on ads, can Tesla stay as profitable as it has been?
So that's the bottom line, isn't it? Is Tesla building the future, or is it just building cars? Answering that is the key to figuring out if this stock is a huge bargain or a dangerous bubble. The story is definitely not over yet. Thanks so much for breaking that all down for us, and thanks to all of you for tuning in. Be sure to subscribe to RichTogether TV for more deep dives like this one. We'll see you next time.